Icahn receives leniency from creditors after short seller Onslaught. His personal loans no longer tied to Icahn Enterprises' market value. Renowned activist investor Icahn has been battling back after a short seller assault resulted in a nearly 40% plunge in his investment firm's shares, causing concern among the primary banks from which he'd borrowed money as their collateral's value decreased. After lengthy discussions with his creditors, the 87-year-old billionaire is now intending to move past this event and diminish the potential impact of future attacks. On Sunday, Icahn and his lenders agreed upon revised loan terms which decouple his personal loans from his company's share price, a critical risk pointed out by the short seller. These new terms increase his collateral, establish a 3-year complete loan repayment plan, and stipulate that only fluctuations in his company's net asset value could incite a margin call. This change should alleviate share price pressure by reducing the fear of mandatory stock sales to satisfy margin calls. Shares of Icahn Enterprises, recognized by its ticker IEP, have hovered below $30 after Hindenburg Research claimed in May that the company's assets were overvalued, and that founder Icahn's decision to borrow against the stock had left the company vulnerable. Prior to the release of Hindenburg's report, IEP's shares traded above $50. Sources indicate that Icahn Enterprises is comfortable with its asset valuations reported in its public filings. Icahn owns approximately 85% of the company, which had a market value of $18 billion before the report and $10.7 billion as of last Friday. The remaining shares are mostly owned by individual investors. Around 60% of Icahn's IEP shares were used as collateral for his personal loans. As the stock value dropped, his lenders quietly urged him to provide more collateral. This episode has been a rare sign of vulnerability for the typically powerful investor. Forbes estimates that his net worth has declined by about $8 billion this year. The sharp drop in IEP shares sparked rumors that Icahn had been forced to sell off parts of his investments. There were also calls for him to disclose the loan details, including from fellow billionaire investor and long-standing rival Bill Ackman. According to sources, Icahn hasn't liquidated investments to meet margin calls, and has $3.7 billion in loans. Under the revised loan agreements, Icahn consented to offer additional collateral, which will now total roughly $6 billion, including $2 billion of his personal funds invested with IEP funds in its hedge fund, and approximately 320 million IEP shares. Icahn also agreed to a repayment schedule where he will pay the banks $500 million in September, make 8 quarterly payments of $87.5 million starting a year later, and settle the remaining balance of $2.5 billion 3 years from now. IEP's portfolio includes an oil refinery, a meat casing producer, and an investment arm that manages Icahn's significant stakes in companies like biotech firm Illumina, printer manufacturer Xerox, and pharmaceutical company Bausch Health. One key question is how long IEP will continue its $2 quarterly dividend, which with the depreciated share price equates to a yield of over 25%. Icahn receives his dividends in stock rather than cash. Hindenburg, led by Nathan Anderson, claimed in a report on May 2 that IEP shares were trading at a premium of over 200% to the reported value of its assets. Hindenburg gained attention through high-profile bets against hydrogen truck company Nikola and the Indian conglomerate Adani Group, which lost over $100 billion in value after Hindenburg targeted it in January. During its earnings announcement in May, IEP revealed that it was under investigation by the U.S. Attorney's Office for the Southern District of New York, but it didn't foresee this significantly impacting the business. It also reported a decrease in value of one of its holdings, an auto parts division that had filed for bankruptcy in January. While some questioned whether the assault would weaken Icahn's influence, he continued with a proxy fight at Illumina, pressuring it to rescind its $7 billion acquisition of cancer detection company Grail. Illumina's shareholders elected an Icahn nominee to the company's board in late May. Shortly thereafter, its CEO stepped down, opening the path for the new leadership to consider divesting Grail.